Netflix shares under pressure this morning. The earnings missed estimates, and the company cut its full-year forecast for operating margins. That stock right now down by 6.5%. Joining us right now to talk more about it is Tom Rogers. He is Claigrid Executive Chairman, a CNBC contributor, and a Versant Senior Advisor. And Tom, thank you for being with us this morning. The stock reaction is a pretty sharp one, especially for something that is supposedly a one-off issue when it comes to the tax situation in Brazil. What do you think the real reflection of the stock price move is today?
Well, Netflix often has some real volatility around its earnings announcements that I tend to dismiss because it generally doesn't get the bigger story right. The bigger story is that they had a great quarter, and without Brazil, their margins would have been over 30%, as they would be for the year without that one-time blip. And nobody else is close to that in terms of operating margins. So where they're acing it in terms of pricing, international distribution, the scale of their programming budget, they're way ahead of everybody else. And I think their monetization on advertising is just beginning. So all trends are looking strong.
Maybe the bigger story here is, A, its competition with YouTube, and B, what's happening with Warner Brothers. Maybe you could talk us through what you're thinking with all of those ideas. This was a big issue yesterday. Warner Brothers announcing that it's putting itself up for sale, that it has had several unsolicited bids. They did talk about this on the conference call yesterday from Netflix. What's your thought in terms of Netflix potential interests with Warner Brothers?
Well, I think that I think they made clear that they're not going to be major bidders here. They said nothing is a must-have, and it's very hard for me to see that Warner, with multiple bidders, is not going to be priced as a must-have. It's also unclear to me what they'd gain by that. They have all the distribution in terms of subscribers that HBO has and more. That distribution of HBO streaming would be totally duplicative of Netflix's current footprint. And they're doing great with their own originals. It's not an area where they really need HBO's help. They could get dinged some if somebody bought Warner and cut off the Warner library from Netflix, which does play a role in terms of a number of the top 20 shows on Netflix. But paying $60 billion for defensive reasons only does not sound like it's something that would be part of the Netflix playbook.
So
on YouTube,
who is Warner Brothers a must-have for?
Paramount is certainly making the case that it needs it. Paramount has a need for real entertainment scale. Its churn on its service is very, very high. It needs to get that down. It has a decent amount of sports programming, but as an entertainment destination, it's really lacking. Some have argued that NBC, Comcast would be in there because Peacock, again, has a great array of sports programming. It could use some scale on entertainment, and its churn is also high. It's a one-of-a-kind asset, Warner, and it's unlikely another one's going to come along anytime soon. So if you're looking to scale up in the streaming distribution space and create an entertainment destination, this is kind of your shot.
Do you think this goes into a situation where you split up the pieces? Do you think it's largely a total sale that goes to Paramount? I guess the question is the price on all of these things. How do you see this playing out, Tom?
Well, given Warner's rejection of the Paramount bid, it really looks like they're trying to get to the split, where I have to believe there are there's a more active bidding situation for them with Warner, the studio, and HBO out on its own. It's hard for me to see that anybody else other than Paramount is interested in buying the whole company. So if you're Warner and you want a competitive situation, I think you either have to get to the split or be willing to offer pieces of the company separately. I believe Amazon may be in there. I don't believe Netflix interest will be high. But Amazon has shown on sports, it's shown on advertising, it's shown on its own service, it's shown interest in owning a movie studio with MGM. It's shown real interest in packaging in numerous streaming services as a bundler. I would think that they're a more likely player among the big tech companies than Netflix is.